And usually my taxation class is offered every year from January. Even for my taxation class, we don't have too much time to discuss. We only touch a little bit about payroll tax, a little bit. Everybody know what's unique of payroll tax. Let me refresh my questions. Everybody know when we talk about payroll tax, what does payroll tax usually mean, including what? When you receive a check, by the way, everybody, when you receive your paycheck on a statement, what kind of deduction?
Federal tax.
Federal tax, withholding, right?
Yes.
And unemployment tax, right?
Right.
And Medicare, Social Security, so many things.
Right.
This big chunk is about almost like a 17 or 18%, almost. That's once every paycheck period. So if you receive a paycheck every other 2 weeks, then your company must do that every other 2 weeks. It's headache. So for the big company, usually within their accounting department, they have a sub department. It's called payroll tax department. Those people, they don't do anything. They just do payroll tax and payroll. And some company, yeah, connect the payroll department to the HR. HR department work with accounting department to deal with payroll tax. A lot of things. This is not only the payroll tax, also related to like benefit, insurance, such thing, retirement, 401k, a lot of things. So when we talk about tax, other than income tax, another big one is payroll tax. How about another thing? Any other? You have a state tax. You have how do you say that? What's the workmanship? Worker compensation, right? You have a lot of things, taxation, or property tax, by the way. As a business, not just building, okay, if your company own building, not just building, not just real estate, everything, every personal property pay property tax, a lot of things. So when we say tax payable mean, we will talk about that probably for today. We will give you an example. What's a payroll tax, or tax payable? They really mean the tax liability already incurred, but your company has not paid yet. We will see what happens, right? Okay, next example. Your company start growing. So Mr. A used to just work home, work at a garage. But right now, your company start to looking for space, office or warehouse or whatsoever. Then your company sign off a 1 year lease. 1 year lease. According to the lease, your company, okay, by the way, every month is say $2,000 rent. Alright? Monthly rent fixed for 1 year. However, according to the lease agreement, your company must pay $2,000 as a security, $2,000 for the last month, even the last month probably is next year, and also pay for the first month. So upon the time your company sign off the lease agreement, your company pay out $6,000. So this is more complicated. This is more complicated. For this transaction, totally your company pay out $6,000. However, it covers at least 3 things. One is $2,000 security deposit. Then first month rent. Then last month's rent. Oh, by the way, on the day your company pays $6,000, assuming the lease has not started yet, so just mean everything is prepaid. Okay, assuming the landlord is very solid and you do not expect any default from the landlord side, so you pay out $6,000 and you will get $2,000 security back once lease expires. assuming no any damage. And number two, you company expect to use the facility. Okay, what kind of account you want to pick? Would you pay 6,000? You want to pick up cash? Oh, by the way, you're gonna become worried about the cash right now, right? The cash will become very close to zero. We'll see what happens. Okay. All right. Anyway, we just leave that issue alone. So we pick up cash. How about the other account? A little bit tough right now. Okay. Let me give you the hint. We will create another two accounts, and one account is called security deposit. Everybody can give me the idea. When we create security deposit, which category it belongs to? Security deposit is your assets. I know it's tough. I know it's tough, but we need to practice. Security deposit is your assets. It's not your equity. It's not, of course, it's not your liability. All right. So you just transfer $2,000 from your cash account, even though you pay out. Even though after you pay out, those $2,000 no longer under your control. But very interesting, the thing even not under your control still belong to your assets. I will tell you why. How about another 2,000? And we created the name is called prepaid rent. It's called prepaid rent. So anybody give me an idea which category prepaid rent belongs to? Which category?
Accrued expenses?
Assets again. Surprise you. Okay, surprise you. Surprise you. Prepay, if you see any prepay, you prepay, not somebody prepay to you, okay? You prepay out to somebody else, even though the money pay out already, no more under your account, bank account. However, surprisingly right now, okay, no more surprises later on, okay. Anything prepaid belong to assets category. I know at the beginning this is a little bit tough for you, because right now you need to learn which account belong to which category. You just need to practice over and over again. All right? The reason why prepay belong to assets, because you have the right to use the facility. When we relate something to the right, not guarantee, but at least give you the idea. When you holding the right, something right, or interest, usually they are under the assets category. Any question so far we can discuss, because we can move very slowly, I don't worry about that, because for this class, as I promised you, I just want you to take away some very critical concept related to the financial accounting. That's good enough. Yes, go ahead.
Okay.